U.S. markets have glided higher as China has been closed. Will the trend continue when the Chinese markets reopen, or will the trend reverse? Joining us today is Peter Hug. Peter, good to see you again.
It's nice to be here again, Daniela.
Well, I want to start today by talking about silver. It continues to react to stronger copper and oil prices, but will the real test of whether this strength is sustainable come when China reopens?
Again, that's the million-dollar question. The U.S. has had a relatively pretty much free ride for the past week after the employment numbers last Friday pretty much put a nail in the coffin on the Fed moving anytime soon. China's always sort of been the stumbling block overnight. It's either been under pressure or there's been intervention by the Chinese government. So now we've had a week with China closed, the U.S. basically just roaring ahead on expectations that interest rates will stay at zero by the Fed, and tomorrow China comes back.
Right. Well, we noted the world marketplace has been quieter as China's markets are shuttered for Golden Week here. But let's take a look at gold now. The metal losing some gains after hitting a 2-week high overnight. How do you see it set up, Peter?
I'm still constructive gold. Again, this will also play out against China. If the Chinese market continues under pressure in the short term, I think that'll be negative for the U.S. equity market, which should create somewhat of a floor for gold, albeit I still caution investors that if the U.S. stock markets resume their down leg, the impetus will be to raise cash, and that'll put a cap on the upside to gold. But should China, again, experience problems and affect both the European and the U.S. equity markets, I suspect where the overvaluation is in the metals market is in the industrial complex, copper, silver, oil, and some of the PGM metals.
All right, Peter, well, let's wrap with some numbers here. Are you expecting the silver-gold ratio to retest the 75-77 range from the current 72 level?
Again, I have to qualify that comment. If China continues to be weak, which I do expect it to continue to maintain a slower posture. If that affects U.S. equity markets and the industrial metals get hit, I think silver at current ratios, it's actually gone through the 72. It's at around 71.5 to gold. I think is overextended, and a trade back to a 75-to-1 ratio, in my opinion, would be justified.
Just one last thought, Peter. You said that the $16 level here for silver might be tricky for some investors. Could you just explain that?
Well, you know, when we had a perfect storm in July and August, you had silver break down under 15. At the same time, the mints were behind in their production. So you had a high demand surge coming into a very thin supply market. Over the past week, with silver approaching $16, investor interest has ebbed off considerably. I'd say volumes are down about 70% from a week ago on the retail level at silver at $16. And I suspect what it is that the retail investor is just a little cautious here. Every time they've chased silver over 16, they've been rewarded by a pullback. So I think they're holding back. That's giving some of the retail premiums for some of the more highly sought-after products such as the Eagle and Maple Leaf time to catch up on the production side, and we're seeing premiums soften somewhat there. Should silver stay above this level, if China doesn't disappoint and we can get silver surging above 1650, I think retail comes back into the market. But until we see a confirmation on the upside, I think retail investors are a little wary at these levels and just don't want to get caught on another downdraft, you know, having bought 16 and then looking at 15 next week.
Peter, thanks so much for your thoughts.
You're welcome.
And thanks for watching this week's edition of For Pete's Sake. We'll see you tomorrow. Thanks for watching.